Okay, in this slide, we have two parts, which are introduction and findings. In introduction, we have explained about Panasonic Manufacturing Malaysia Berhad and Panasonic Holding Berhad. And then for the second part is findings. We have do the comparison between Panasonic Manufacturing Malaysia Berhad and Panasonic Holding Berhad in terms of liquidity ratio, profitability ratio, efficiency collection, and leverage ratio. Okay, in this slide, we have two parts, which are introduction and findings. In introduction, we have explained about Panasonic Manufacturing Malaysia Berhad and Panasonic Holding Berhad. And then for the second part is
Initially called Matsushita Electric Industry Co. Ltd., the company was formed in 1980 in Osaka, Japan by Konosuke Matsushita. It was relabeling as Panasonic Corporation in 2008. In Malaysia, Panasonic has had a strong presence through the operation of factories and manufacturing centers for a past every decade. This company is one of the major investment in Malaysia since in product good for the international market in addition to marketing them locally. Panasonic Manufacturing Malaysia (PMMA) is one of the company primary plant in this nation. The factory can be found in Shah Alam, Selangor and Kelantan. Among other places in Malaysia, they manufacture a range of goods such as electrical appliances such as refrigerator, television, washing machine, air conditioner, and other household appliances. Panasonic also manufactures electrical components such as battery module, electrical component, and energy system. Panasonic Manufacturing Malaysia contribute significantly to the growth of the Malaysia company by giving local work job and training opportunity. Panasonic is one of Malaysia's top manufacturer thanks to its dedication and quality and innovation. Panasonic Holding Berhad is an electronic brand originated in Malaysia and has grown to become one of the largest manufacturer and supplier of electrical products in the country. This company was set up in 1965 and was initially known as Panasonic Malaysia Sdn Berhad. Panasonic Holding Berhad is known for its range of electrical products and home appliances. One of the electronic equipment is television, audio system, and air conditioner. Kitchen appliances include a toaster, water heater, refrigerator, and microwave oven. Panasonic is known for its emphasis on value and quality. As a local brand, Panasonic managed to attract the attention of Malaysia consumers. It's the commitment to providing the need and want of consumer. Panasonic is also active in its marketing strategy and consumer service, making it a trusted brand. With over 50 years of experience, Panasonic has grown and expanded its presence in the local and overseas market, making it one of the leading brands in the Malaysian electronic industry.
next presentation of ratio. For the first term in this ratio is liquidity ratio. Uh, First, we let Panasonic as company A and Panasonic as company B. So for the first term is current ratio. The formula of current ratio is current asset divided by current liabilities. So for the company A, we have obtained that current ratio is 5.13. Meanwhile, for company B, we have obtained the value of current ratio is 1.52. So first, take a look at company A. So for every 1 ringgit of current liabilities, the company have only RM 5.13 of current asset to repay the current liability. And then for the company B, for every 1 ringgit of current liabilities, the company have 1.52 ringgit of current asset to repay the current liabilities. Okay, things that we have concluded based on the current ratio, Panasonic gets 1.52 ratio with 1 as compared to Panasonic, which is 5.13 ratio to 1. This indicates that for every 1 ringgit of current liabilities, Panasonic has RM 1.52 of current assets to pay off its current or short-term liabilities, and Panasonic has 5.13 ringgit of current assets to pay off its current or short liabilities. Based on the current ratio, Panasonic is better in paying its debt when it is done.
B. Quick ratio. The formula is current assets minus inventory minus prepayment over current liability. For the company A, every 1 ringgit current liabilities, the company have only 4 ringgit and 75 cent of quick asset to pay off current liabilities. The company B has only 940 cent of its quick asset to cover 1 ringgit of its current liabilities. Based on the quick ratio, Panasonic get 4.751 as compared to Panasonic, which is 0.941. This indicates that for every 1 ringgit of current liabilities, Panasonic has 4 ringgit and 75 cent of quick asset to pay off its current or short-term liabilities, and Panasonic has 94 cent of quick asset to pay off its debt when it due. Based on the liquidity ratios, Panasonic are more capable to pay the debts when it is close to the due compared to Panasonic.
Okay, next we have profitability ratios. So for the profitability ratios, first we have net profit margin. So for the company A is Panasonic and company B is Panasonic. For the comparison is based on the net profit margin, Panasonic managed to get 9.16% compared to Panasonic, which get negative 4.40%. This shown that for every 100 of sales, Panasonic earned RM 9 ringgit 16 cent of net profit and Panasonic lost RM 4 ringgit 40 cent of the profit. Based on the net profit margin, Panasonic is more efficient in generating profits relative to its revenue compared to Panasonic. Okay, next, for the comparison of gross profit margin is the gross profit margin of Panasonic is 15.84% and the gross margin of Panasonic is 15.38%. It shows that Panasonic has a better gross profit margin than Panasonic because for every RM 100 of sales, Panasonic managed to earn RM 15 ringgit 84 cent of gross profit compared to Panasonic that earned RM 15 ringgit 38 cent of gross profit to cover operating expense. It shows that Panasonic is more efficient in generating profits from its sales after deducting the cost of goods sold. Okay, next, the comparison of return on asset is the return on assets of Panasonic is 8.78% and the return of asset of Panasonic is negative 5.03%. It shows that Panasonic has a better return on assets compared to Panasonic. It is because for every 100 ringgit of total assets, Panasonic managed to earn RM 8 ringgit 78 cent of net profit. It indicates that the higher the return of assets, the better performance of the company because the company is more productive at managing its balance sheet to generate profit. Okay, so for the last component in profitability ratio is return on capital employed. So the comparison is the return on capital employed of Panasonic is 8.95% and the return on capital employed of Panasonic is negative 1.93%. It shows that Panasonic has a better return on assets compared to Panasonic. It is because for every 100 ringgit of capital employed, Panasonic managed to earn RM 8 ringgit 95 cent of earnings before interest and tax. It indicates that the higher the return on capital employed, the better the performance of the company because the company profit generate more. Okay, to conclude, the profitability ratio is based on the analysis of profitability ratios. Panasonic has demonstrated strong financial performance and superior profitability compared to its peers and competitors. This result highlight the company's ability to efficiently manage its resources, generate consistent earnings, and deliver value to its shareholders. The robust profitability ratios also indicate a well-managed cost structure and a strong position in the market. As a result, Panasonic emerged as a more attractive investment choice for investors seeking stable returns and long-term growth potential.
Okay, next, efficiency ratio have three. The first is inventory turnover. The formula is cost of goods sold over average inventory. For the company A, inventory for ratio is 12.55 times, 10 for its stock, 12.55 times in a year. For the company B, inventory for ratio 3.76 times, 10 for its stock, 3.76 times in a year. Based on the inventory turnover, Panasonic get 12.55 compared to Panasonic, which is 3.76. This shows that Panasonic managed and sell its inventory far more efficiently than Panasonic. Next, B, average collection period. The formula is account receivable over credit sale time 365 days. For the company A, ratio of 36 days show that the business take 36 days to collect that from its account receivable. Next, company B, ratio of 73 days show that the business takes 73 days to collect that from its account receivable. Based on the average collection period, Panasonic gets 72.83 days compared to Panasonic, which is 35.99 days. This shows that Panasonic is more efficient in collecting payment from its customer. C, total asset turnover. The formula is net sales over average total asset. Total asset turnover for the company A is 0.97, showing that for 1 ringgit for total asset, the company generates 97 cent in revenue. The company B, total asset is 1.14, showing that for 1 ringgit for total asset, the company generates 1.14 cent in revenue. Based on the total asset turnover ratio, Panasonic has a ratio of 1.14 compared to Panasonic ratio is 0.97. This shows that for every 1 ringgit worth of total asset, Panasonic generates RM 1.14 in revenue, while Panasonic generates 0.97 cent in revenue. Based on the ratio, Panasonic can generate more sales from its asset. Based on the efficiency ratios, Panasonic appear to be a better choice than Panasonic. Panasonic has more efficient management of inventory, collections, and assets show better operational effectiveness, and assets show better operational effectiveness and financial performance. Yellow Yasmin.
Okay, next is leverage ratio. For A, which is debt ratio. The formula of debt ratio is total liabilities divided by total asset multiplied by 100. And then Based on the debt ratio, Panasonic has a debt ratio of 13.87% compared to Panasonic has a debt ratio of 45.87%. This shows that for every RM1 assets, Panasonic has RM0.14 in debt, while Panasonic has RM0.46 in debt. Based on the ratio, Panasonic relies less on debt to finance its operations compared to Panasonic. Next, debt to equity ratio. The formula for debt to equity ratio is total liabilities divided by shareholders' equity multiplied by 100. Based on the debt to equity ratio, Panasonic has a debt ratio of 16.1%, which means for every RM1 of equity, the company carries RM0.16 of debt, compared to Panasonic has a debt to equity ratio of 84.75%, which means for every RM1 of equity, the company carries RM0.85 of debt. Based on the ratio, Panasonic has a more conservative approach towards debt financing with a lower reliance on debt to fund its operation and growth. Next, time interest earned. The formula for time interest earned is EBIT divided by interest expense, which is EBIT is gross profit minus with operating expenses divided by interest expense. So, based on the time interest earned ratio, Panasonic has a ratio of 72,873 indicated that the company operating incomes is 72,873 times higher than its interest expense. This implies that Panasonic has a strong ability to cover its interest payments comfortably, signifying a healthier financial position. Based on the leverage ratio, Panasonic appears to have a more favorable financial position compared to Panasonic. Panasonic may be in a better position to weather financial challenge and manage its debt-related risk compared to Panasonic.
Panasonic Manufacturing Malaysia Berhad will be the reference company for supplier and investor if evaluated based on measuring including liquidity, profitability, efficiency, and leverage ratio. Panasonic Manufacturing Malaysia Berhad is a safest choice because it offers superior coverage of short-term obligation. Panasonic Manufacturing Malaysia Berhad is more stable and safe company to invest in due to its lower financial risk and better debt profile. Panasonic Malaysia Berhad better finance ratio make the company more appealing to investors, maintain stability and profit as well as to any supplier seeking warranty payment.